Hey, what's going on, guys? So we're seeing a complete shift on crypto Twitter around Ethereum. Everybody seems to be getting really bullish about Ethereum, and it's because of what Tom Lee has said about it being the ChatGPT moment. So we're going to get into that, and we're going to see what a ChatGPT moment of adoption for Ethereum would actually look like. Because over the last couple of days, we are seeing company after company coming out saying that they're adding ETH to their treasury. So it's not a case of having one company having a sort of a Bitcoin treasury. We're seeing company after company coming out saying, hey, we're adding ETH to our treasury. We even saw one company say that they sold all of their Bitcoin holdings in favor of ETH. So we're going to dive into all of this. Let's go ahead and take a look here at what Tom Lee has to say, though.
What is it about the market setup and market structure today that's really enabling digital assets to take off now?
That's a really pertinent question, because when we look at 2025, the market's leadership is coming from two categories. It's still AI and the Mag 7 and that complex. But this year, the leadership has also surged from crypto-related equities, and that's Circle, which really blew the doors open. It's the best IPO performance probably in more than 5 years. I think what's happened is that the AI boom is really an enablement in the sense that it has now made it clear to investors that there is a move towards a digital economy, and I think that has captured the imagination, and now investors are very interested in programmable money. And I think that's where stablecoin have become the ChatGPT story of crypto, because we've seen mainstream adoption by consumers, merchants, and banks. And really, again, Circle has brought a halo to that whole process.
Okay, so what does Tom Lee mean whenever he says ChatGPT moment? Well, he's essentially talking about an acceleration in the pace of a new technology being adopted. So we take a look here, you can go back to this chart, and you see all the way back to the 1900s, you see the telephone, how it took really to get mass adoption to where everybody, as a percentage of households. So on the left-hand side here, you can see the percentage of households, how many people have actually adopted the technology. And what you find is that as we get closer to present day, technologies become adopted much, much more quickly. So why is that? Well, because of the internet and because of the network effects that a lot of these technologies already have, what we end up seeing is we see that they become adopted much more quickly. So if you look at the telephone, it's a very slow process because it slows down the communication between people. Whereas right now, we can tweet out about Ethereum on Twitter, and suddenly, 100,000 people have seen it and they're learning about it, and those people are telling more people about it. So the pace of adoption is happening much, much more quickly. And one of the big things that's kind of held it back was, the regulatory environment. That's about to be lifted next week with the Clarity Act and Genius Act going into place. But this is what ChatGPT moment looks like. You have the ChatGPT moment for NVIDIA. Now, I actually got into this trade. I made a video about it back like 7 months ago. But I had gotten into this back in November of 2022. And what we saw was just a massive rally in NVIDIA, because in order to train these AI models, you need a lot of NVIDIA chips, the GPUs. And so you end up with these trades that are just, once in every 10 years type of situation, where you have this new technology come up and you just have this asymmetric hockey stick type shape on the chart. And so we're going to end up seeing something very similar with Ethereum here, because if we come over to the chart, it's actually looking like it wants to break out right now, go a little bit higher. I think that if we do get a breakout here, we'll probably go to about 3,000 is what I'm thinking, just because there's a little bit of resistance there. But if we come to the higher time frame, this is what a ChatGPT moment of adoption would look like on Ethereum. So you have going back to November of 2021, this is when the Fed started to cut rates, and it's difficult for these types of assets to really gain traction whenever you're in a tight monetary policy from the Fed and other central banks around the world. So we've been in this 4-year cycle of just consolidation, essentially making a massive bull flag, and we're about to break out and go higher. My view, I think minimum we're talking 30,000 in my opinion, with all the trillions of stable coins coming on, going all the way up to the top of the channel. You're talking 80,000. So I zoomed out there a little bit for you so you can see the chart better. But we basically have this long-term trend channel, and from a technical perspective, you have a couple options here. You can look at the top side of the channel going back to January 2018, or we can bring it down slightly to the prior bull run highs, which, top of this channel, you're still talking $50,000 Ethereum. So I think we're approaching a situation where you're about to see this massive institutional adoption because, like I've said, up until this point, we've pretty much only seen retail speculation investment type of thing going on. We really haven't seen massive institutional adoption of this technology. So what we're about to see, and going back to the ChatGPT moment, is you're going to see trillions of stablecoins. You're going to see trillions of tokenized assets pouring into Ethereum. You're going to see the largest banks and financial institutions in the world starting to build on this platform finally. And so, this is how you get this massive asymmetric return where Ethereum just absolutely skyrockets. So, I'm thinking January 2027, December 2026 timeframe, just based on global liquidity. Again, I don't follow the 4-year cycle. I don't think that holds much weight anymore, but anywhere from $30,000 to $80,000 Ethereum is what I'm targeting. And again, this is going to depend heavily on how fast these financial institutions actually start launching products, launching stablecoins, launching tokenized assets, launching their own versions of DeFi platforms so that people can actually trade these tokenized real world assets. So it's really going to depend on that. Because, if we wake up in a year and a half and you've got 5 to 10 trillion worth of assets on Ethereum, you're going to see a very, very different world. Because right now, we have 140 billion worth of stablecoins. So it's going to look very different very, very quickly. So moving on here, we have a chart that shows the staked ETH is at all-time highs over here on the left. And then you have the ETH on exchanges at all-time lows. And so this kind of contributes to this asymmetric return where you're about to start seeing massive demand, where we're seeing these companies start to, as Tom Lee put it, and I've put it in the past, they're going to buy ETH because they're going to build on ETH. They're going to build their platforms, their stablecoins, tokenized assets. And that means that they want to secure the network and it's a store of value. They're going to want to hold it as a treasury asset. And so because you have 30% of the supply locked up in staking, meaning that essentially that float has been removed, meaning that it can't be readily bought by the average person because it's locked away in staking. That effectively reduces the supply, the available supply, to be purchased even more. And there's not very much on exchanges. So whenever these large financial institutions and investors start wanting to buy, there isn't any to buy. And so you end up with almost like a squeeze type of environment that's just going to drive the price very, very high, very, very quickly. So now we can hear from Vlad from Robinhood.
And you probably saw last week, Chairman Atkins of the SEC gave an interview about tokenization. He called it a great innovation. Mm-hmm. And we agree with that. We think tokenization is perhaps the biggest innovation to come into capital markets in the past decade. So Robinhood, I believe it was last week, they came out and said that they're going to be building their own layer 2 on top of Ethereum. Now, it is essentially a clone of Arbitrum. So they basically take the technology of Arbitrum, they clone it, and they essentially, it's what they call like one of you private label a product. So you can have like a manufacturer over in China that just mass produces this pen. And then what they do is they basically, they'll have a company come to them, they'll make a purchase, and they'll private label it. So the private label here would be Pilot pens. You could put Leo pens on it, and now it's your private labeled product. Essentially, that's what they're doing with Arbitrum. They've taken the technology stack of Arbitrum, they put their own private label on it, and they're calling, the Robinhood Layer 2. So Robinhood's going to start building on top of Ethereum, and they aren't going to be the only ones. There's a lot more that are going to be coming around the corner, start launching their own products, and what's held them back up until this point, like I've said, is regulation. But, they're getting the jump start here with the Clarity Act and Genius Act and whatnot getting approved. So, they're going to get a head start in the market. But this is going to be a trend that we're going to see continue as Wall Street and all these financial firms start to rebuild on top of Ethereum. It's funny because like people think that crypto is just going to replace banks, and I don't think that at all. I think that they're just going to evolve and adopt this new technology. For example, they didn't die whenever the internet came around. They evolved and they built out platforms on the internet. So moving on to Altcoin Daily, put out an interesting article here.
100,000 Ethereum on our balance sheet, and we're just getting started. that's just the start. We're just getting warmed up.
Bit Digital recently exited Bitcoin mining to focus solely on its ETH treasury and staking plans. And now your company is announcing that it completed its transition to an Ethereum treasury strategy. So now Bit Digital shifted its entire treasury to Ethereum, becoming one of the largest ETH holders among public companies. Can you take us through what was behind the move?
Look, coming from an institutional background, I've been in this space for many years, and I feel like many investors felt like they missed on the Bitcoin wave. Ethereum represents that next wave. And, we're not just buying a coin, we're putting our reserves into a protocol that powers trillions of on-chain activity. We believe Ethereum is becoming a new category as a strategic corporate asset, like gold and treasury bonds once were, but with one difference. Ethereum is alive. It moves with technological innovation. It has tens of thousands of developers on chain, more than any other blockchain, including Bitcoin or Solana. And also, Ethereum captures real activity, real economic activity. As stablecoin volumes grows, as tokenization becomes a thing, the fees generated by that activity flow back to ETH holders. And Bitcoin does not participate in that feedback loop, in that value loop. We believe Ethereum is where economic throughput is frankly heading.
We have seen growing adoption recently, but what else is it about Ethereum that makes you believe that the network has the ability to rewrite the entire financial system?
There is no second best to rewrite the financial system. Ethereum has something called smart contract technology, where you can actually program conditions between wallet A and wallet B. And when those conditions are met, value is being transferred. Also, tokenization is a real thing, and a lot of that is built on Ethereum. You can tokenize real world assets. In other words, you could digitalize real world assets or traditional assets like stock, like property and real estate, even art. And you could put that in the blockchain, and you could trade the digital version of that on the Ethereum blockchain. It's not possible to do that with Bitcoin. Ethereum is the blue chip institutional blockchain to do that, and it's the only one. There is no second best. We now have...
Yeah, so I couldn't agree more. There is no second best. There is Ethereum. And, this is why, I speak against alternate layer 2 chains, because Ethereum is just so big. It would be like trying to have multiple internets. You got to disconnect from one internet. You got to go join this other internet so that you can go to... imagine if you had to go from, let's say you want to go to YouTube, right? And you have to disconnect from this internet and reconnect to another internet so that you can go to YouTube. And now you got to disconnect from that internet to go over to a different internet so that you can get to Amazon. It just doesn't work. It works better if it's one massive network. Everybody else comes on top of Ethereum. They build on it. You have Ethereum as a base layer. Everybody can profit. Everybody can have a beautiful, massive ecosystem that everybody can build on and flourish. So it's not that I'm against other projects. It's just that I see a future where they're going to inevitably merge onto Ethereum as a layer 2 solution, because otherwise they're just going to be a little island out there all alone, and they just aren't going to have the massive network effects that Ethereum has. And so you get into a situation where you, like I say, you make a lot more money if you have a lemonade stand in the middle of Midtown Manhattan versus a desert where you just don't have a ton of people, a ton of traffic. Anyway, so I think that pretty much wraps up today's episode. Exciting times ahead. So until next time, y'all take care.